Morning, good morning. Hello, everyone. Let's see who we got in here. I news the Anderson, the unicorn queen. All right, so we got a rebranded queen. Good morning. Let's see what we are. Mhm. All right, so it looked like majority of the volume hit in the first 3 minutes, and from there we just kind of been stair stepping down. All right, we'll give everyone a couple more minutes, and then we'll jump into looking at the charts and take a look at what the news event this morning did, and then prepare for the rest of the day. Missed most of the drop. Sorry about that, Anderson. Oh, it took the retracement at 490. Okay. Yeah, sometimes these emojis are in a way I can't read like the last couple words on the first sentence, but got it now. No, that was a good retracement though. It looks like a good entry from the retracement. I mean, 20 points on ES. Wow. That's still $1,000 trade on a mini. Mm, I didn't realize that. Okay. Oh, on the hour. See, I saw that yesterday at the market maker sell model because first I noticed it on the 15 minute, but then I saw that the hour was like halfway through it. So I said, I wonder if it's just going to continue running on the 15 minute and set up the sell model on the hour. PJ Zed. Oh, welcome, Zed. I'm not sure I've been introduced by you before. Welcome to the live stream. Wow. A sweet trade, TJ. It's practice accounts that teach us what to do in real accounts. Mm-mm-mm. All right, let's jump into it here. Oh man, just what I didn't want to see. Okay, so wasn't sure what the dollar was going to do, but judging by the big drop we have in the equities market, I figured the dollar did buy. And so we have those same two levels I had marked up last week that we took over, leaving equal highs. We now have swept those equal highs and digging into the daily fair value gap now. And I guess I should have known since we did a consolidation, expansion, and then we started consolidating again. So here we are with another expansion. And we'll see if price now wants to come up and hit these levels. Let's get rid of some of this. We don't need it anymore. All right, so now we know the dollar has plenty of space in here to do its damage. It could even retrace back down to the fair value gap in order to push higher, even though we did just see the external range liquidity taken. And let me see. That's all I got for the dollar. I'm just going to move on. All right, so on the daily, so far for ES, we see that there's been two fair value gaps that have been pushed through and violated. We had one that resided here. We had a second that was here. And so far, based on where the daily candle is, it's showing that it's violated and can be deleted. Now we could see a retracement back into the range, and it could close here by the end of today, and this fair value gap will still be here. But as of right now, it's pushing lower. We have a new week opening gap that it looks like it's going to violate that as well. Lower than here. We can get rid of this. Yeah, if it wants to keep running, I think the next level we got here is at 49.49. At 49? Yeah, roughly. So that's another 25 points roughly from where we stand now. Let's get rid of this one. Yeah, let's drop time frames and see if we have some other areas that it may trade into. All right, so we have plenty of bullish fair value guys for it to find support. Whether it pushes past this level I just mentioned, 49.49, which would have been the order block, or it continues south into one of these fair value gaps or the new week opening gap. So we have plenty of areas for it to trade into. This was a new week opening gap from last week that it's currently traded at, and the new week opening gap it may trade to down at 49.13 is the one from the week before that. We get down to the hourly, yeah, much of the same. Maybe some lows down here that trade to what I had 49.49, so that's here. Yep. Okay, I'm fine with these levels. So 49.49 and then 48.75 roughly seems to be the areas for ES. Oops. Let's go over to NQ. Start off with the daily again. Oh, I forgot I had made a prediction already for this. At 8:25, really, Ray? Oh my goodness. Oh no. Wow. Now it's at 6:25. Jeez. All right. Well, yeah. Welcome, Ray. It's tough. All right, so it looks like this weekend I was already anticipating this kind of rundown to the fair value gap prior to moving up. So yeah, so this candle that we're looking at is right on target. So we have equal lows here. Down at what's this? 17,554. So that's another 80 points south from where we are. And the fair value gap is at 7,440. So that's a couple hundred points. That's a good run down. So we may not actually reach that. We do have a gap here at 460. And there's also from 2 weeks ago, the new week opening gap. All right, if we drop to the 4 hour, again, the equal lows, and then the gap here. Equal lows here at 17,172, but again, that's pretty far away. So for now, we're going to look at 17,554. And after 554, we're going to look at 463. 463. All right, let's now get down to the chart we're looking at trading. I finally came and got those lows from Friday, I think. I think these are Friday lows. Yep. All those lows from Friday that it neglected to get to New York, to London, and Asia. Traded through them this morning. All right, I'm going to go ahead and throw the session highs back on so we can see what's still out there or what wasn't taken this morning during price action. London lows gone. London high is still available. And Asia high was traded to. Asia low was traded to. Okay, so it's only the London high that's available, and we have the New York session highs. Lows coming in 30 minutes. So for now, I'm gonna close my mouth and we're gonna watch the opening bell, and I'm gonna also take a look and see who's in the room and greet them. Tommy, Robin, Kendrick, TJ, Fauci, Ray. Let's see who else is in here? Gavin. All right. Good morning, everyone. All right, Luke. Good morning. Trader Boy. Good morning. Okay, I guess 8:30 took all the energy out of its sail, so all the wind out of its sail, and look at the 9:30 not really moving much. You know what I didn't show was actually the results of CPI. So anyone who's new, big move downwards came from here. We had news release at 8:30. It looks like CPI was a tenth of a point over what they had forecasted. And also here, 3.1% versus 2.9% year over year. Okay. Mm, okay. All right. Just trying to figure out why we missed forecast on the upper end. We came in above forecast on CPI, and I was trying to figure out how that was good for currency, which in turn is a negative for equities. And it was saying that higher inflation leads to higher interest rates or less likelihood of a reduction in interest rates, which is good for currency. And that does make sense. Yeah, I think we have two new people in the chat this morning. We have Trader Boy and we have Zed. Well, glad to have you. If you have any questions, just go ahead and throw it in the chat. Someone answered it for you, whether it be myself or someone else. And also, if you have anything to add, feel free to just jump in. But since you are new, are you brand new to trading, or how long have you been trading? Look, we have decent sized retracement starting here. Look and see how far it goes. It does have a fair value gap just above. And I'm traded for about 2 years. Okay. Awesome. Awesome. All right. We'll see if we can't change that. Well, Trader Boy, seems like you're right around skill level of many of the people in this room. So again, welcome. Hey, Chuck. Good morning. I wonder if this is just enticing people to go long. Look and see how long this is or how long it lasts. See. Mm. Mm. Yeah, so far price is showing that maybe it's a little bit exhausted from the big run at 8:30. I'm showing a very, very tight range here. We'll look and see what macro brings us in about another 3.5 minutes. I mean, looks like potentially we'll get these highs broken here. Equal highs set up right next to it, and then ultimately we have the high from opening range high from about 12 minutes ago. Let's see. All right, Queenwood. Which time frame is that on? Okay, the 3 minute. Okay. Yeah, I was looking right now. It looks like Nasdaq is the strongest at this very moment. It's the one pulling back the hardest. Right on this 1 minute, we've now had 1, 2, 4 rejections from the fair value gap. Okay, another retest of the fair value gap once again. We got another 8 minutes before the hour's up. Hmm. Yeah, Gavin, dollar just got up and ran away this morning. Once the news was released, it just took off. Oh, yes, took us low. Okay. Thank you, Mitch. That makes sense. Mm. Yeah, right when that happened, that's when Nasdaq decided it would sweep that high. Yep. Yeah. Right now, it does appear the NQ is the stronger of the two. The Dow. All right. Mm. All right. As we're heading into the top of the hour, let's go ahead and take a peek at all the others are rounding out, finishing up their hour as well. Oh, I didn't realize I wasn't on the screen. All right, let's get the dollar back in frame. And we can see that Dow is continuing to seek lows even as we speak. It's at its lowest point of the hour. And so this is the difference between the three different indices. We see a small candle on ES. We see a very large candle on the Dow. And then we see a retracement. So we saw a large candle on Nasdaq, but we do see now it's pulling back into the range of the previous hour's candle. And we do finally see some sort of retracement on the dollar as well, from its highs from last hour. So it made a new high this hour, probably during the 9:30 open. But now we see that retracement back into the range, into the zone of the previous hour's candle. So the dollar and Nasdaq are seems to be opposites, but then S&P and Dow are still looking for their key levels so they can join Nasdaq and they can pair up again. So hopefully in the next hour we'll see them sync up again, and it should be a little easier price action then. There we go. You're right, Anderson. It does appear the fireworks are over. So far since we've been on, price has been moving around a little slower, but that's fine. Maybe it gives us time to study a little bit better and find out where our entry is going to be. Okay, we've crossed over into 10 o'clock. So anyone looking for the silver bullet, this is your hour. All right, here on the 1 minute, we have equal highs here, which may be right in the fold to be taken by this current candle. Let's see if we get a bounce off the fair value gap here. switch and move up a little in time frame and see if there's anything that'll give us a better indication of where price is going. Looks like it doesn't want to approach this high just yet at 694. Five minutes into the next hour. So macro period in just a couple minutes. So far, no market structure shifts, no breaks of structure. Here on the 2 minute, the fair value gap here, even though we've had some wicks pierce through it all the way past the 50% of the breaker, all the candle bodies still sit either within the fair value gap or above. After that might have been a good trade for you, actually, if you were looking at the Dow. I mean, the Dow seems to be the weakest of the three. I mean, if you was in the short, that was a great trade to be in. Took it higher, yeah. Let's see if this candle can eclipse the high of the previous candle and close above it. See if we can get a little momentum going here. Hmm. Could that have been the silver bullet? Doesn't seem like it was. Let's see. All right, so you still have this fair value gap on the 3 minute if you're bullish. Right, and you have here equal highs. So you would have been trying to enter at 658, getting out at 683. So that would have been a 25-point move there. That actually might be the silver bullet, but we'll see. Yeah, it wouldn't be the first time where we saw price dig into a fair value gap over a 15-minute period prior to actually showing some momentum and reaching for a target. Yeah, just keep in mind the 15 minutes is still quite bearish, and so even though some of the lower time frames might flip back and forth depending on where the breaker structure is, the 15-minute until we get to like the highs of the day, we're still going to be bearish. Not even the high of the day, but the high of the news event at 8:30. Right? Unless we go lower. So those are the two options. Yeah, so you have New York PM. Generally, there's no news, so you're just trading market structure and looking for targets that weren't met in the morning. London, see, I've never traded London, but it just looks so clean. And if I can manage to stay awake, I would trade London, but it's a struggle for me. But you're right, the New York AM session, whether it's going to be split at 8:30 and then you got the opening bell at 9:30 and sometime news at 10, you end up not really being able to trade until 10:30 unless you get in before 8:30. While we're waiting, we're 15 minutes in. Let me check on the other indices, see what kind of shenanigans they're into. Alit, good morning. How are you? Oh, that's tough, Alit. Sorry about that, man. I know you were in for the short and you got stopped out by $5. That's a tick or two. It sucks, man. Svanil, I see your comment there. I'm trying to think about what I can give you, what I can say. Um, the thing is, you want me to give you advice that the rest of us didn't get, so it's hard. Um, you want to continue to trade every day. You want to continue trading right now. Um, However, you're not familiar with a trade setup that you like and that you've back tested enough to trade. Uh, yeah, I don't. Yeah, if I had the answer, I mean, none of us would really be here. Still working on our consistency. Hey, I'm gonna be honest with you, Swanil. I don't have the secret that you're looking for. The one setup that works 80% of the time, and I can give it to you, and you automatically will start being at least 50% successful with it. I don't have that without the work that goes involved with learning trading and learning how the candles move. I don't know how to bypass that. Right. All right. So it was the gentleman who asked me about the silver bullet because it just delivered. And where was he? Mitch. Was it Mitch who said that? Yeah, there was Mitch. There was Mitch. Hmm. All right, at least 60%. All right, let's see. All right, Swanil. So here, so the setup that I like to take, it's the breaker block, and sometimes it's a unicorn, sometimes it's not, but a lot of the times it is. So it's the breaker block setup. I'm not sure how familiar you are with it, and let me just figure out which time frame. I think I grabbed it from the 4 minute because I don't think it was available on the five. Mm, Oh, it was okay. 4 minute is what had the fair value gap. But anyway, so I saw that someone gave you the suggestion and said work off of the 5 minute, which is a good suggestion, especially when you're new and you're not really comfortable and familiar with the different time frames and what one will show and the other won't, and how to navigate that. And so it's good to stay on the 5. You can go down as far as the 3, but I wouldn't go further than that. If I were you, I would stay on the 5-minute. And so the breaker block is essentially this candle here activates the breaker block. And the reason why this activates the breaker block is because you have what we call a swing high right here. These two equal highs. To the left, you have a lower high, and to the right, you have a lower high. So this swing high right here, you expect to be a protected high on the down move. On the down move, you expect this to be protected, and you expect for price to just continue doing just like this one was protected when it went down and it started retracing back up. It didn't take this high. It went down and made a new low. So you expect it to do that. Here to here to here, make a new low. You expect for the high to be lower than this high, so somewhere in here. And then you expect a new low. But that's not what we got. We got it put in this low here. And instead of putting in a lower high, it put in a higher high, which took out this high right here. Okay. And when it did that, that created the breaker. Okay. So this is a setup that you can use. Now, it's not going to be 100%. There's still going to be some other things you need to look for. There's going to be some other things that may make this setup fail. But this is the setup that I like the most. And I like it when there's a fair value gap. So when it makes this move up and it overtakes this high right here, when that high is overtaken, you want to see a fair value gap somewhere in this range. And I found it on the 4-minute. See, on the 4-minute, it's right here. And you can see when it traded back down into the breaker with the fair value gap, even though it traded through the fair value gap multiple times, the bodies of the candles stayed either inside the fair value gap or above. So they gave you a little more confluence that this may hold for a bullish move. And the easiest, closest target were these two equal highs right here. Now, these were only made after these failed attempts to leave when it came back down. So prior to that, you could have looked for a move up to the fair value gap, and you could have got out right here at the lower end of the fair value gap. If you had multiple contracts, you remove one and you keep a runner to go. Otherwise, if you only have one contract, this might have been a place to exit right at 691. But remember, you would have been entering down here at 645. So that would have been a 45 point move there. But you would have had to wait some time. It first entered, confirmed it here at 936, entered for the first time at 940, and now you don't get your payout until 1020. So it would have been a 45-minute wait for that trade to work out. But this unicorn model is the one that I like the most and the one that I use the most. So I would say practice and perfect that one. And it's usually what you get. It's after a move that you miss. So this happens and you're like, oh man, I missed the move. So you don't try to jump in and catch a short and get in down here, because if you try to get in down here, look at these wicks. So look at what happens. If you don't get in up here and you end up getting in down here and then it pulls back before the next candle starts, now you may get scared and think that it's buying. So you get out of your trade and then it does this. So you don't want to try to get in the trade here. If you missed it, you missed it. And then you look for when it turns around, because price has to balance. This is unbalanced price. It's just sell, sell, sell. There needs to be buys somewhere in this area. So it's going to build back on this side. The same way you see a market maker sell model, on the other side, you see the buy model. And I know there was a lot of information right there, but really what I wanted to get through to you is the unicorn is the setup that I like. So if you just want one setup, take this one and practice it. So it's the breaker block with a fair value gap inside. And then what you're looking for is anything close to 25 points, maybe a little bit more. This one, you can see it's already delivered quite a lot. I mean, it's already up to 80 points now. If you had gotten in down here around 640. Thanks, Robin. Hell, I wish I took the setup. And I just explained why it was a good setup. Yeah, man, I'm glad you're here, Fauci. Definitely glad you're here. All right, everyone. We are now at 10:30, so we're halfway through our session this morning. Just give me a moment. I'm going to run, refill the old Java. I'll be right back in 2 minutes. All right, back. Oh, Splash. Welcome, welcome. Look at that. Son of a gun. Yep. From the entrance down here at the breaker now, and you're up. Whoever took that entrance is up over 100 points now. Mm-mm-mm. Oh man, I know crypto is in. Sorry, Unicorn Queen is in there now. No, I'm sure he didn't take this trade. I'm sure he wasn't really familiar with it. Let's go ahead and throw that in. You want to go a couple points below the breaker. Right. And this would have been your 2-to-1 trade. Would have ended here with a 56 pointer. And it's currently trading up here. So almost a 4-to-1 trade, 110 points delivered so far. I moved to NQ probably, I'd say I moved to NQ around May or June of last year. So about 9 months ago. Before that, it was ES for about 18 months, give or take. And then my first year of trading was, I would say, mostly the Dow. So I've kind of bounced around. I went from the fastest indice to the slowest, and now I'm resting in the middle. And so we really got to push for this leg here at 10 o'clock. And if you see, it was only four-minute candles that delivered the entire range. So in 15, 16 minutes, that 100 points was delivered, as opposed to waiting 45 minutes to an hour for a 30 or 40 point trade to deliver. And that's what we see a lot of times when price is stalling and just kind of playing around. But when it's ready to move, it doesn't take long. Let's see, Mitch. Do we have more to go? Let's see. And you want 17,800. All right. So on this pullback, see, we're looking at 2.5, 1.5 deviations there, 2 deviations here. If we get another leg up, and that depends, it really depends on if we're in a market maker buy model or if this is just a retracement and then we're going to seek lower prices. But yeah, it really depends. 17,990, I can see that happening. But we could also do 843 if it really pushes that hard. One thing I didn't show was the New York high and low. Excuse me, at 10 o'clock when that was made. It's pretty easy though, because it's that opening range from the news event. So this is going to be the New York high. It's not what I was looking for. Let's find that London high. Where is that? Go. All right, so we have an open session highs and lows that are still there, and that is the London high and then the New York high and low are open. All right, looks like we're gonna hit this high here. So if we do sweep this high, next target will be 17,790. And we got 840. Uh-huh. All right. So Queen, you want the London high. You want daily high. That's where you see price going. All right. Oh, okay. Oh, got it. All right. I thought you were going up there. I was like, oh, wow. Okay. Did we take that high? Let's see, this high is 757 and this is 757 and a quarter. Okay, so we did eclipse the high just by a tick. So let's see if it continues. All right, there it goes. So who was that who asked how far can we go? Oh, that was Mitch. Okay. Yeah, Mitch. So we'll see this level first at 763, and then look for 790. Yeah, Gavin. Sometimes it's just hard to process all of that. Not only seeing the setup because I try to see every setup because of the trading room we have here. So it's not only that I see my setups, and that's a flaw in being the host here, is that sometimes the information is not processed in the way you need it to for you to say, okay, yeah, this is me. Let me get in this. Let me do this. And so you just end up being slow and you end up talking yourself out of it. So it happens. And that's what I'm trying to overcome is being a host, is also being able to trade my setups. Um, and it's a work in progress. Yeah, Mitch. All right. So let me see if strategy I've been working on works here. Let me go to the 1 minute. All right, so the last fair value got to be tapped in was here on the 2 minutes. So let me see if I can't. And I would put a stop here. Go with a 1 to 2. Right, Mitch. So 17,800. Okay, now I would go with the stop loss at 708. Or you can go with a stop loss of 738. Right, that original trade from the breaker has delivered 4.5 to 1 on a risk reward basis. It's delivered over 130 points so far on a 28-point stop. This right here is a trade setup for anyone who got in late and they jumped in at 739. Oh, hey, Sports Hub. Hey, Dustin. Welcome. Right, so we did eclipse the high of the last candle. Got 2 more minutes left. We'll see how it closes. Yep, we want to see it close above this high. We can. All right, Mitch, there is that 17,790 level. All right, let's get back down and see if we can't find another one, another fair value gap entrance. Don't see one. Let me go to a higher time frame then. Okay, nope, we don't have one yet. All right, so we might end up hitting this target without having another target to stretch. So Mitch, it's going to be up to you how you want to stretch your target setting. Right now I show 17,798 as the way I like to trade fair value gaps with a 1 to 2 risk reward. If you want to extend it, go ahead and do so. Yeah, I hear you, Gavin. I hear you. I know it's something I'm trying to overcome, but I really do enjoy this. And on top of that, not every breaker that I select is successful. So, you know, but I hear you. I'll work on it. All right, let's see. Will it close above or not? All right, good job, Mitch. Way to go. Because I was looking at it, I was like, I don't know. Let's see if it retraces or not. All right, Mitch, where'd you catch it at? Where'd you get in and where'd you exit? Nope, nothing today, Dustin. I set up this breaker down here. It was a unicorn too. It had a nice little fair value gap in there on some of the lower time frames, 4 minutes down to the 1 minute. And I didn't take the entry. Some of the other members did, and they rolled this thing up 130 points. Okay, good job, Mitch. Way to go. About $1,500 on the mini account. Yeah, no, I should have taken it. You're right. I absolutely should have taken it. But yeah, these are the best ones where you got a deep retracement, a big push, and anywhere from 9:30 to 10:30 on these big news mornings where there's news at 8:30. Anywhere from 9:30 to 10:30 is where you see the reversal. I, for the most part, catch them usually between 10 and 10:30. But this one you can see it put in a low at 9:30 and then validated the breaker on the next candle, and then for 30 minutes gave us an opportunity to enter. Actually, more like 45 minutes. Gave us about 45 minutes to enter on that trade. Mm. Yeah, ES and Dow were weaker this morning, and so during the last hour, Nasdaq was the only bullish candle, the only one. Hell, even the dollar finished bearish just slightly. All right, so that's the 300. So that's the 2 standard deviations above this high at 17,684. Hmm. 3 standard deviations is just above the fair value gap, so I'll drop the Fibonacci. We don't need it any longer. All right, so the breaker delivered a 1 to 5. 1 to 5 trade. Not every day do you get one of those. We're over 70% retracement. That could be. Yep, 71. Really, really close to 78%. And then if we want to take it wick to wick, we just crossed over 71%. So right in that sweet spot OTE. So I'll go ahead and mark that up as well so we can see that. Okay. Oh, thank you, crypto. You're right about that. We are entering the macros. So let me drop down to 1 minute. All right, even on this low time frame, breaker structure is here where I have the red line. So that was where, for anyone in the long, this was the stop loss I placed just to help anyone who wasn't sure where to put it. Okay, there we go. All right, let's get rid of these long tools just to give us more room to see what's going on here. I think we will close soon or a lot later. Mike, the way I did that was I took the last retracement before the move. So I think I did on the 5-minute. So I took this move down, which was before the big move out. Yep, that's how I did it. And so on my favorite tracement, so it's just these numbers. So like 4 is going to be essentially 3 standard deviations above, because 1 is the range itself. But these are the numbers. So we have 4 there, 3, 2, 2.5. I think that's it. And so that translates to the 150, the 200, 250, the 300%, and then the 400%. All right, Mitch, you're in at 757. Okay. Wow, that was on the retracement. That's a good entry. All right, so this would have been that fair value gap entry. And I would go one deeper. Sit here, 1 to 2, 27 points. Okay, so you say you got a 3-minute breaker. Okay. Yep. 736. Okay. All right, so that little sliver of a fair value gap didn't hold up at all. Let's see if this low holds. Now to the 1 minute, looks like we're probably going to sweep this low. All right, so let's drop the long tool. Now we'll see if this is short-lived or if this low is really the beginning of further downwards movement. Okay, we're still pretty early. We still have another 12 minutes in the macro, so So we'll see what it brings. But we do have 3 bearish fair value gaps here. So swap the low here on the 1, the 2. Okay, so the 3 minutes holding tight. It's down here. If 3 minutes going to break, it's going to break it down in the breaker that actually sent price up. All right, I think price is either going to hold here or we could see it return all the way down. Those are the 2 options. All right, Sports Hub. Yeah, I'm just waiting to see if sweeping this low gives us more bullish momentum. But again, we did reverse out of an optimal trade entry. Okay, we had our first test of a bearish fair value gap. Retest of the bracket structure level. Nothing. Let me jump back over there and see where it's at. Yeah, struggling big time. All right, let's just take a peek at that for just a moment, and then we'll jump back over. Promise I'll be quick. All right, so this is the last couple hours on dollar. Look how indecisive that is. Wicks above and below. Very, very little body. Nothing really for both the 9 and 10 o'clock hour. We now see the Dow for the last hour after it was done pushing during the 9 o'clock hour. It just basically settled during 10 o'clock and just paused where it was. Now we see the open for the next hour. Not a big range for now, but it's only been a couple minutes. But the last hour, it's a bit disappointing. Look at that range. Moving over to S&P. We saw S&P take out the high and the low of the 9 o'clock hour. So now we may see it follow what Nasdaq has been doing and start to build some momentum back into this range, the big bearish range that it had this morning. So we could see that this hour, and you can actually start to see the beginning workings of that. And then we see Nasdaq just being the strongest of the 3. So let's keep that in mind as we're looking for trades. So if you're looking for longs and you like longs, then you definitely want to sit on Nasdaq as it right now being the strongest of the three. If you're a person who is looking for shorts and you believe lower prices are in our future, then you probably want to sit over here with S&P or the Dow because they're a little bit weaker this morning. But anyway, let's get back over. Promised I'll be quick. All right, this is what I was wondering. I said, let's see how price reacts. So it's already taken out and invalidated the first fair value gap. It's now inside of the second one. All right, trying to get back into that optimal trade entry zone. All right, so we had our first test. It's tipped its toe into the optimal trade entry once again. Make this a little larger. It's 5 minutes after. We still have another 5 minutes here. Mm. Yep, you're right. Right, it came right off the second fair value gap on the 5 minute. The first one was invalidated, but the second one seems to have held right around the 50% mark. Consequent encroachment of the gap. Oops, log back in. Right. 1 to 2 is only 22 points here, but anyone who jumped into this fair value gap can get 22 points at 17,778. Assuming this fair value gap holds and we don't get a deep retracement here. But let's not forget, we did shift bearish when we broke this red line here. All right, let's look at this 5 minute and see what the trade setup would have been there off of, because it's going to be a fairly large fair value gap here. Let's run this up to 1 to 2, and maybe that could be a target setting. Bingo. Just above, right above the OTE. All right, so 810, 810. If you took that 5 minute fair value gap here, I mean, it's 37-point stop, which is massive. I get it. All right, and this is off of the, oh, this is not even a 5 minute, it's the 3 minute. All right, first things first, we need the 1 minute to deliver a 1 to 2 trade, which is an 11-point stop loss, delivering a 22-point take profit. We need for price to push through 777 3/4. All right, 10 seconds left. Let's see if it can go ahead and push through. All right, so we may get a trade back down to this opening here and then give it another try. This is the swing high it's trying to break. All right, maybe the next candle. I like it when candles close near the upper range. You usually get momentum into the next candle. And that completely faked me out. Let's see what happens when it gets back down to origin, right around 17,755. Hey, there's a fair value gap just below here. So maybe that's where we'll find some support. Maybe race for those highs. Oh, McTony's. Good morning. Good morning. Sorry, I didn't see you. 1040 1 minute breaker holding. Okay. Yeah, I see what you're saying. 1040 breaker. Yep. Okay, so we did come back to origin. We tapped in by 1 tick. And let's see now if it's able to go up and reach 17,777. Right, let's give it a try and see where it goes. All right, still not able to do anything with it. Okay, try it again. In a slightly deeper retracement. Now it seems to be getting rejected from the optimal trade entry. So right at 60% is where it's getting pressed out. 62%. 1, 2, last 4 candles have raced up to the level, and all 4 have been rejected out, pushing for lower prices. We have one more fair value gap still within the drawdown zone of this trade setup, and we'll see if it trades down to there. All right, there it is. Let's get up to a higher time frame now. Right, so it's pressed out of that range. So that trade setup did not deliver 1 to 2. It got almost there, maybe 1 or 2 points away, but it did not deliver the whole 22 points. It only delivered 20. So, so yeah, not all trades work out, and that strategy on fair value gap entries doesn't always work out either. So you still have to make sure that you're managing your trade and moving your stop loss as you need to. All right, let's see if maybe we go into discount prior to moving up again. Discount starts right around 721. So we're not too far away from it, about 15 points. Yeah, the dollar is starting to show a little bit of bullish momentum after taking 2 hours off. All right, a little lethargic movement at the moment. So we'll just continue to monitor price and see where it wants to go. These lows have not been swept. Price is now kind of finding its footing in this zone here. It's probably, if I had to guess, it's probably around 50% of this leg. Yep, right around there. 751 is at 747. So we'll just continue to let price print and it'll find its footing and let us know where it's going to move next. But as of right now, it hasn't shown that. It looks like the fair value gaps below are holding price at its current level. But we do have the optimal trade entry above us, and we're inside of a massive bearish fair value gap from the morning movement on this entire pink area. So we definitely need to be aware of that. Even as we see price find support and we're thinking it could go higher. All right, just gonna make another test of the OTE. And it is. All right, let's see where it goes. Where does it go from here? Hmm. All right, looks like a rejection out of the OTE once again. Just like we saw when we were on the 1 minute time frame, we saw several candles back to back. Now we saw it move away. This is the 4 minute, so it moved away for 5 or 6 minutes, and then it came back to retest, and now we see it rejecting again. So my guess is we're going to sweep these lows, probably sweep these lows as well, get down to discount, which is anywhere below the 50% mark here. We'll see if price finds footing here and then moves back up. Okay. All right, I thought price was going to break down and we were going to start to see it move a little lower, which would then take out some liquidity, which would allow price to then move higher. And it looks like it's not going to do that just yet. Yeah. And one. All right, so that's what we're going to do. We're going to wait for price to decide where it wants to go. Okay. There we go. Okay. All right, so we'll let price run out of this funnel. It's caving in on itself, so it eventually has to go somewhere, and we'll just wait. Hey, Sniper, good morning. Welcome in. It's long. Yeah, come on, Sniper. Let us know what you got. I didn't check my email to see if I have it. Nope, no Topstep email from me. Yeah, top Sniper. I saw something that said that people who signed up for, I think if you signed up for the early access to Topstep X, those people would be getting an email today. I thought I signed up for it, but maybe I didn't. I know I wasn't looking forward to switching from TradingView, so it wasn't high on my list of things to do. But if you did go in and sign up for early access, then you should have an email today. And if I'm not mistaken, they were given they're offering, I think, 50,000 50K combines for $5 or something crazy. I saw an email yesterday that said they're going to be sending out offers to certain individuals. Yep. Hey, Sniper, did you, inside of your invitation, did it say anything about some reduced fee for a 50K account or a combine? Okay, yeah, I saw something about that. Yep, that's exactly what I saw. They said they were going to be offering yesterday, and the $4.50 is because they have to pay the fee for you to get live data to actually trade it. You have to pay CME Group, these people here. I think it's Chicago Mercantile Exchange. You have to pay them $4.50 a month for. Normally, Topstep pays it on your behalf, but since they're essentially giving away free combines, they're going to make you pay that piece. But once you're funded, they go back to paying it on your behalf, and you don't have to worry about it. Yeah, then they said they'd give 1,000 people the opportunity to get into essentially a raffle to get it. But the people who were on the list to get Top Step X, I think they got it without having to compete with everyone else. Exactly, Khaled. You're right. If you're a good trader and you're profiting, then they're right there with you. They're partnering. All right, looks like we had a push out of the funnel, but before the candle closed, it traded right back into the range, closed inside. And guys, just so you know, this funnel doesn't really mean anything. This trend line here doesn't really mean anything. It's just a shape that I saw, so I drew it. But I wouldn't take a trade off of it or anything like that. But it looks like they want to coast into lunch after having such an eventful morning between 8:30 and 10:30. And trade down to 50% of this wick here. Okay, we got a closure outside. Let's see how the next couple candles trade, and then we'll see what we do. Oh, you got the long from the bottom. Okay, sweet. All right, it's going to trade back inside, or now when we get the rejection. All right, Shark Trends. Good morning, William. Good morning. All right, got back into the range. Look at that. All right, there's a sweep of a low. Let's see, will it now create some sort of fair value gap or anything that'll give you a reason to think bullish other than this one large candle here. All right, Queen. So off to you in a bit. Yep, go ahead, William. What do you have? The consistency target rule. Let's see, what is the consistency target rule? Mm-hmm. Okay, got it. All right, now I understand what you meant by the consistency target. Yep. Yeah, William. So basically, what happens is if you went over your 50% target of like if you were doing a 50K challenge and you needed 3,000, but you did more than 1,500 in one day, take whatever your biggest day is, multiply that by 2, and that's your final target that you need to reach in order to pass. So then that big day that you had turns into 50% because it can't be greater than 50%. Right. So instead of making 1,500, which should have been the max that you made, if you made 1,700, take that 1,700 times 2. Now you need 3,400 to pass instead of 3,000. All right. So now we're retesting the OTE. We finally pushed out of the range that one bullish candle. It left us a fair value gap, which is what we like to see. This is essentially for anyone who follows ICT or brand new. This would be like a 2022 model. You have a sweep of a low, and after you get a sweep of a low, which is a liquidity sweep, then we get a big bullish candle. All right, let's get rid of these trend lines. All right, you can set your target here. If you had entered coming out of what 756, so this would be a 20 point, or you can set your target up here, 790. And it'll give you about 35 points, it looks like. Now, price still needs to push. We're not out of the woods yet because this would be potentially the entry that you'd be looking at. right, big push out of the optimal trade entry there, all the way back through the fair value gap. So let's see if that was a fake out or not. If I was taking a long, I would have took it here. So 1 to 2 would sit there. 1 to 2 would sit just above this previous high. I do not like this potential fair value gap, so I need to see this closed in. No, that wasn't OT. That included 50%. So this would be discount. All right. Trade it back down into the zone. Now we see a push out of it. So this is for the 1 minute. This is for the 2 minute. The trade would look like this. Should reach target sooner. Yep. So you'd have a 16-point stop, a 32-point TP. Over here, 19-point stop, 38-point TP. We got a closure inside of the OTE for the first time in a while. Okay, yeah. Well, you could do that, William. You could get down if you've already passed the 9,000. And you were already, when you started the day, you were above 4,500. Then yeah, just go ahead and I don't know how you how you execute this, but go ahead and lose until you get down to 9K. All right, Brad took a quick 5 points. Good job. Yeah, if you close the day up 15K and you made 10K today, then that 10K is going to represent your 50%, and you're going to have to get up to 20 in order to pass. You made 20K today. All right, William, next time, wait until you pass your combine and then go in and rob the bank. No, Race the King, he's talking about he's in the middle of a combine. He's trying to pass his funding, but he ran past the target and he didn't close his trade. So now he's above the target by $5,000. But the way it works, you can't make more than 50% of your total on one trade. So he's violated that rule. Oh, okay. Yeah. So when you pass your combine, it's going to take 1 to 2 days for them to register your new account as a funded one. So you'll have to wait a couple days before jumping back in. Why I'm looking for bullish? Just because we made such a push through this fair value gap we're in now. I mean, I'm not really doing anything. I'm just taking what price is giving me. And this question is Khalid. He asked the question. I'm not really looking for anything, to be honest with you. I'm just taking whatever setup is here. And right now it's showing bullish. Now it did break through here, which we say, okay, well, now we're going back bearish and we're sitting here waiting. It did fail to take a new high, started breaking down, but it didn't make a new low. So all I did was just show this setup. I'm not taking the setup. It's just for anyone who might be bullish. I'm just showing what a 1 to 2 would look like in this situation. But you're right. We have an optimal trade entry here, which represents 62% at the lower end, 78% at the top, 71% in the center. And then on the move up, on the retracement back down, we have an optimal trade entry here. So starting at 50% and at the lower end is 78%. So I'm not really looking for anything, to be honest with you. Right. And both of these long tools, just to add on to the question that was asked, both of these long tools came from this candle. This candle set up the fair value gap to provide a potential long. And the long is only to take out this high. It's not to buy all the way up. It's only to take out this high right here. All right, all right, all right. Let's go down to the 1 minute. Let's look at the macro, see what we get here. Maybe this is where we're going to get price structure break. So maybe we'll get another swing to the low, to the downside through 736, which would invalidate either of these trades here. right? During our last macro is where we saw price structure break. And then from there, it just went sideways. So we'll see if it was just waiting for an hour to come back and readdress the same levels. Like yesterday afternoon, yeah, we could. Yep, this is the candle you're talking about. All right, so this one is invalidated. Didn't work. This one's surviving by thread, maybe 1-2 ticks. It's likely to get pressed through as well. All right, so on this breaker, we had a sell out of, so once it was confirmed on this candle 1051, we had a sell out of the 50% mark down to structure, breaking of structure. It broke structure and immediately traded all the way back to the same 50% mark that the entry was on. So we're from 771 down to 725. Wow. So about 40 points, not bad. But it came back down, still confirming the structure break. But at the same time, it continued to return to the breaker. Now it looks like we're finally getting that push down into the OTE from the bullish leg at 930. So now that we've broken this low. So when we first broke the low, the protected high was up here. Now that we've broken that low here. So we go between this point and this point, and we find our swing high that's protected now, which is this one. So now we are bearish until we get here. It's filled with a bunch of fair value gaps on the 1 minute. So I have these right here, the bearish ones, and all the bullish ones are down here. All right, awesome. Good job, Shark. 1500. Jesus Christ, William. All right, we'll take a long then. Yeah, man. Splash. Sometimes that's how it is. You got to lose money. Yep. Well, keep in mind, we do have the New York low. We do have the New York low down here from the low at 9:30 at 586, 17,586. So if we get a full retracement back down, then we'll hit the New York low and we'll still have London and New York high open. Man, I'm mad William has a problem that he's struggling to fix. He has a problem most of us wish we had. Hmm. Hmm. All right, this discount that I have here, this box, this line represents 50%. So it's not just the optimal trade entry of 62 to 78. It also includes 50. And in fact, let me go back. This must have been taken on a 5-minute maybe. There we go. 5-minute. Yep. All right, let's see if it goes during lunch, if it goes below this OTE area and tap into the order block or right down to the low end, right at 78% to hit this order block here. And then we return to bullish after lunch. That's my prediction for the lunch hour. Otherwise, yeah, I'll just wait and see what happens. But anyway, thanks everyone. Thanks for being here. We had another good session this morning. Hopefully many of you were able to make some money. Hopefully not many of you lost a lot. And many of you were able to learn something. So what we're going to do is we're going to break for 1 hour. We'll come back for the afternoon session at 1300. So thank you all for being here. Appreciate your energy. Appreciate your effort. Thanks for the support. See you in an hour. Thank you. Oh, by the way, before I go, hit the like button on your way out and subscribe if you haven't already. Cheers, everyone.